Have you ever wanted to get involved in real estate development, but didn't know where to begin? Do you think real estate development is only for the large hedge funds or major corporations, the big guys? Or have you done some development in the past and are looking to scale up? If you answered yes to any of these questions, then this podcast is for you. Welcome to the W.I.R.E.D Wealth and Real Estate Development Podcast. I am your host, Nick Smith. Get ready to have your mind blown and rewired as we discuss all aspects of creating wealth and real estate development. Good day, all. This is Nick Smith, and this is the Wealth and Real Estate Development Podcast, better known as W.I.R.E.D. I'm your host, and today is episode 16. Definitely want to thank everybody that has been subscribing, liking, sharing these episodes. I definitely appreciate it. As I stated recently, we reached the 100 download mark about a couple weeks ago, somewhere in there. So we're actually at about 125 now. So I definitely appreciate the love, support, for the podcast. And I ask that you all continue to subscribe, continue to like, continue to share, listen to it wherever you listen to podcasts. I would greatly appreciate it, and it'll help the community. Again, the mission here is to build wealthy communities, wealthy individuals, and wealthy families through real estate development. Today, I have a very special guest with us on the podcast today. He's a true friend and a brother by the name of Randy Raines of Raines Insurance Group. Again, if you listened last week, we've been talking about how to play defense, because wealth building, whether you're doing it through real estate development or whatever avenue that, you choose to pursue your wealth building, is both offensive and is defensive. Offensive are the moves that you make, but the defensive side helps to protect those moves. And Randy, we're definitely going to touch on the area of insurance today, as far as properly insuring your properties, whether it's properties that you are developing, properties that are fix and flips, whatever area you decide to, you decide to go into. We're definitely going to touch on those areas. But Randy, how are you today, sir?
I'm very well. Thank you for having me, Nick.
I
appreciate being here.
I appreciate you being here as well. Former listeners that may not know you, please give us a brief kind of summary of who Randy is. What's your background, where you're from, and what you're up to right now.
Again, thank you, Nick. I really appreciate the platform and your effort and your success in doing this. I only hope you the more and merrier as we go on. Again, my name is Randy Raines. I live in Northwest Indiana. My office is in downtown Valparaiso, right next to the picnic and pavilion area. My background is actually in finance and in wealth. Before insurance, I was in the stock market and got to know interest rates and money and currencies, and really developed a love for education on that. And especially in today's time, it's really nice to sit down with people and understand inflation and how it's affecting people, instead of just saying, talking about percentages or where your family is lumped into. And that's always very perplexing, because not everybody lives in the same bubble. Not everybody. And that's what we really got to do, is connect and educate, and actually make higher learning for us as well. That way we can share it and pass it on. And that's really how I got into insurance. Is I was looking for a business that I could be involved in the community, be entwined with the community, and actually participate. And it was meant for that. It was meant to bring people in and educate them on insurance coverage instead of insurance premiums. And we all know about insurance premiums today. It's probably been the worst year that I've been around as far as increases in that. And why? Why are we paying more? And why is it costing so much more in order to do that? So in learning about different ways that we can help and we can educate people on what is best for your scenario, because mine should be different than yours, whether we're talking about property insurance or home or auto or umbrellas. But my coverage is different than yours, Nick, and yours is different than the people that you're, speaking with and helping. But it's because you're trying to protect your life. And that's the defense you're talking about, is, when you have property and liability and auto insurance and auto liability, everybody thinks about if something happened, how do I get it fixed, right? If a hailstorm comes or Mother Nature knocks on your door and, kicks it in, do you have the coverage that's going to replace it? Or are you going to have the coverage that's just going to give you money back on it because you don't have replacement coverage? Those are all things that are very important for property, but more important for us is the liability. That's the defense that you're talking about. How can you minimize your liability and move it onto somebody else's plate or a different carrier? And that's the insurance we get, is the liability. That's really where we like to talk about, because by far that's what's protecting you and your family today and going forward for whatever may be in your path. But the liability is an umbrella, is however much you decide to get, but that is the part that's protecting your wealth, your entity, your employees, and then all the other investments you have. Because if you don't have liability and somebody slip, trip, and fall on yours, they're coming after for your property and your insurance policy. And that's what we want. We want them to go after your insurance policy and not your own personal wealth, not your personal financial picture. So that's really what drives us to be in front, be talking. Most want to talk about property because you're buying it for a value. You're buying an investment that is going to return income to you. So that is important, but it's the smaller number in the equation. So we're talking about something that you can see, touch, smell, like property. And then liability, on the other hand, is something you can't touch. So that's really why we got involved in insurance. That's why we got involved in investment properties. And we do all different sizes of investment. You said, if you buy one that needs renovation, so a fix. Is it a fix and flip? Is it a fix and hold? And then multifamilies, timeshares, Airbnb, VRBOs. Everything there has a different scenario for you than it does for I. And that's really how it needs to be, because your picture is different than mine. Mm-hmm. So, if we get into it, we need to discuss what's more important to you. And then we develop a plan or strategy that is best for you because it fits your product, fits your growth.
Gotcha. Well, man, we're going to touch on insurance for sure and how people, could consider, properly insuring their items. But I want to go back because you said you got your start in the stock market, and correct me if I'm wrong, but you were actually one of the guys on the trading floor, correct?
Yes.
So
I'm bald and loud. So yes, I was good at that.
Good deal. Every time I forget the name of the movie, but every time I think about the trading floor, it's the movie with Eddie Murphy and Dan Aykroyd.
Trading Places.
Trading Places. There you go. Trading Places. That's what I think about. What was life like being on that trading floor? I'm just curious.
Do you remember playing sports in high school?
Yes.
And all that activity around and parents involved and a lot of noise and commotion. But we had our job of playing basketball or playing baseball. But that's exactly what it felt like. It was grown men playing a very physical game, and it was very fast. People always talk about how hectic it was. I didn't think it was that hectic because I was doing this. I wasn't doing the entire stock market. I was doing what was in front of me, and what was important was the market that I was in. So, yeah, it got loud. When it got busy, yeah, it was like knocking the wheels off and rolling downhill. So, yeah, it was you stop where you stop. The ideas behind stock market, there's a lot more money in the game today, so it changes differently. But back then, it could move because, the federal Greenspan or federal market chair market would come out and cough or sneeze, and our market would go crazy. So I remember, if I can share a quick story, I had brought my parents down, and my dad is a pastor. He ran a homeless shelter. My mom worked with them. So they weren't in the lifestyle of stock markets or fast and busy at any cost. So I brought them down to the floor, and I remember my dad, just checking it out. My mom, it was funny. She said, I couldn't do it, Rand. I couldn't do it. I'm like, why is that? She goes, I couldn't take the mess on the floor. There's paper and cups, and it is always littered because you don't go to the trash can and throw it down. We pay people come in and sweep it out, once an hour, once every couple hours. It was funny because she picked up on that, and my dad picked up on the strategy, and he used the word that I still use today. It's called organized chaos, and that's exactly what it felt like every day. Good days, bad days, but it was enticing. It was it moved the market because the market was, in the world. And it was before the E-Trade and everything. We have platforms, I have a trading platform on my site too. it was well before all of that. So it was all cards and yelling and screaming, and it was a blast. It was a blast.
Good deal. Good deal. How long did you do that?
13 years.
13 years. Wow.
Got out in 2005.
Good deal. So what kind of led you to want to, because I mean, you experienced some success from it. You know, you were good at what you did. So what kind of led you to want to seek something different?
A lot of it was my faith, to be honest with you. After 9/11, which we know was just a couple days ago, we celebrated 23 years of it, 22 years. I was on the floor for that. And it was one of the craziest days I think I've ever been on the floor for 2 hours and 41 minutes. And that's how long everything was going on until they finally shut us down. So after that, it became, I was a dinosaur in that market because they didn't need the floor anymore. They had computer trading and platforms. So I really wanted to go that way. And when I went that way, I was just bored. I was sitting behind, 8 screens from 6 o'clock in the morning until I turned them off. And on the floor, you'd go from 7:20 until 2, and then you went home. So yeah, everybody's really good at golf back then because we got off at 2 o'clock. But for me, it was boredom. It was watching screens instead of being physically attached to what you were doing. I just needed a change. It's not like we made tires or toothbrushes. We just made money. So it was very empty in the idea of, if that was your goal, yeah, you're doing great, but I needed a little bit more than just that. So that was the biggest part that I got out. I made a promise with my wife that if I ever got to the point, I would retire, step out, and then find something else to do. And that happened in 2004, beginning of 2005. So got out of that. And when I got out of that, I really was a family man, stayed at home. I have 2 kids, traveled a lot. And then I got it. My father told me I get bored because I was so young, and he was right. So I wanted to get involved in the community. So I wanted to have it more fulfilling for both me and for whoever we were sitting in front of. And we have really patterned our business around that. We pay it forward. We help the new businesses that can't get insurance anywhere else or just need somebody to talk to. And that's really how we started. We built our business on referrals. We built our business on relationships. We built our business on making sure that we were paying it forward more than what we were actually getting. And it has really, that's paid off. It really has. I have 5 employees and I started out with 0. So we've created jobs. And that was actually number one on my business plan, was to create jobs that weren't there before. And so truly, honestly, that's how we started and why we started. We just wanted to be more of a part of a community and be a plug instead of something that was just taking out. So we wanted to be involved in giving back. So that's really how I got into, and insurance did that for us. We got to meet customers and figures in each county or each city and just be involved in what was going on in their area. I'm involved with you in an investment group over in Merrillville, and that led to a lot more connections beyond that little group. And it was fantastic because we used it for what it was, and we wanted to be more connected. Northwest Indiana, not so much Chicago. We wanted a couple counties in Indiana, and that's honestly, that's how we've grown. That's how we sustain, just having feelers in the community and making sure that we're involved and not just having a business, I guess would be the correct term. So property insurance, everybody has a home, everybody has a car, hopefully. And that was our end because everybody needed something that we were developing.
Gotcha. I know when we think about insurance, we do think about property insurance. We think about automobile insurance. Those are pretty much kind of I would say the 2 most popular ones that come up. But when would you say, because everybody's business, so to speak, is at different levels, you have different businesses that, of course, do different things in the real estate sector. You have LLCs, you have some people have S corps, just various things like that. But one aspect that we don't really touch on a lot, or you don't hear about it talked a lot, is actual insurance for your business. So when would you say it's time for an entrepreneur to actually start looking at insurance for the business? Not necessarily just the assets as far as the automobiles and the property, but actual insurance for the business.
So in Indiana, there was a law that was on the table for the legislator that said that when you develop an entity, and so an entity could be a sole proprietor, it could be Nicholas Smith, as yourself, and that could still be an entity besides you, not the greatest way to do it, but it is. There's LLCs and S corps, like you said, and corporations. But as soon as you have something set up with the state of Indiana, you're supposed to get a bank account. You're supposed to have a EIN or a tax identification number, and you need insurance, business insurance. So when you start up your liability, you're getting a policy that just protects the exposure or the risk that you're developing for your business, because you're not working as yourself, you're working as your entity. So your entity needs to have the same coverage as you would have, because we want that moat. We want to build a moat all the way around you and your family, Nick. That way, if something bad does happen, we want it to be on the entity, not on you and your family. So that's why you protect your entity the same way. You have to have that liability insurance, even if you don't have any assets. But for argument's sake and for conversation, let's just say you're a handyman and you're getting into the property business, but you want to, start getting hired out to do small jobs or, reconstruction jobs. That was very easy because we know what you're doing. We know the liability you're going to do. The only thing we need to know is where you're doing it. And then from there, we can make a very easy policy that is affordable monthly, because I know cash flow is a problem for every new business. Cash flow is king. So yeah, let's make a payment plan. But the biggest thing for you is having that liability insurance to bank on in case something bad does happen with the business, whether it's beginning or you're up and flowing with 20 employees. Either way, you need that coverage on the business itself because it is its own entity.
Right. Why do you think more entrepreneurs in that beginning phase, or even established entrepreneurs, really kind of fail to realize that? Do you think it's more ignorance, or do you think, people are so cost conscious at certain levels that they don't think it's necessary? What has been your experience?
In today's time, so if we use 2023, which has been an odd year, I think we can all say it's been a little bit odd. It's cost. It's cost, without a doubt. We're seeing insurance go from a very soft market, which meant you could get insurance for $500 and then you get insurance for $1,500, and there would be that giant range all day. That range isn't anymore. Everything's $1,500 now to start. So it is cost-based. I honestly think that I need that money in order to market or to get your property or to get a spot or a location, right? So insurance is protecting whatever it is that people get or locate to. And that's fine. It should follow the property without a doubt, but the liability needs to be there because you're already having some sort of a risk. You're already doing something for your exposure to what your business is. And the last one would probably just be not knowing what's next. Do they have the bank account or not? Do you have the insurance? And it's probably just they need to know which way to actually take it. I'm involved in a group called SCORE, SCORE. There's in a lot of towns it's an arm of SBA, but they do a fantastic job of they're volunteers, so it's free. 2, they have more information than your accountant and your insurance and your business planner all wrapped up in one, because this is what they did their entire life, and now they're just paying it forward. And I really recommend everybody at least make an appointment and sit Zoom or go in and meet face-to-face, but it's free. Mm-hmm. The free part should outweigh everything else, because they're not going to give you a business plan, but they're certainly going to help you make it. Right. And then from there, you'll find out what's next. Is it bank account? Is it the insurance? Is it property? Is it what's next? And I really think that would be an excellent way to get their name out, because they do it because they're doing the right thing. They're not making money on it. So if cost is a factor, we have a pretty good way to solve that scenario for them. It's not going to build your business, but you're going to have a game plan. And I really think that is probably the last thing, is just having the knowledge or expertise in front of you or involved around you to know what the next thing is going to be.
Gotcha. Yeah, no. And I asked that question, even from a personal perspective, because, recently I had a lawsuit filed against me on a property that I flipped. Thank God, it just got dismissed. So it's not on my plate anymore. But one of the first things my attorney asked me when we kind of sat down and went over the scenario, he asked me, he said, "Where's your business insurance?" And I kind of gave the deer in the headlight look. So, I mean, I had somewhat heard of it, but it's nothing that really is talked about on a, ongoing. It's not out front. It's not, flashing at you. that, yeah, your business needs, just like, you have life insurance on your life, just like you have insurance on your car, and just like you have insurance on your house, your business needs insurance. Your business needs insurance for sure. So that was a lesson learned for sure, for sure. But man,
well, if I could jump on that one for a second, in the last 6 months to a year, I've seen more liability claims just in a discovery of, Nick, Bob Smith over here was on your property, and he needs to know, did you have insurance back on June 1st of this year, because something may or may not have happened, or it was June 1st of last year, something may or may not have happened. And we're getting a lot of those. I used to see maybe one a year, and I've seen 6 or 7 this year of that exact terms of they're looking for a way to find a claim against you. And I've never seen that before. This is the first time that I've actually, and we see a lot of commercials, we see a lot of everything of, there's 2 kinds of victims, ones that have an attorney and one that don't. There's a reason why our costs are going so high. It's because we're having all these claims, and it's driving all our costs higher. So yeah, the liability issue, that is by far one of the biggest things that we talk about now, because it really is a problem. It really is an open sore unless you have it covered.
Wow. Was not aware of that for sure. So we talk about development here, and of course, development is an aspect of real estate investing. When somebody's going out potentially, hey, let's say that they're looking at a piece of land, just raw land, raw dirt, it's not been developed, nothing's on it. Are there any insurance liabilities on the dirt that a potential, aspiring developer should be aware of?
So developer, if you don't have a business insurance that gives you liability wherever you buy your empty lots, then yeah, you would need to get insurance, just liability on that one single lot, and it covers that lot. It doesn't cover what you're going to put on it. It doesn't cover your neighbor's lot, whether they have a building on it or not. It doesn't cover, your intricacies of, are your property lines correct? It is really there for Bob Smith. If he came and walked across your property, tripped and fell because it hasn't been cleaned yet. But yeah, he does have a claim because you are not managing or monitoring your land. Now, if it's just vacant, all dirt, everything, yeah, the problem there is you don't have video cameras on there to prove that you had or didn't have the right safety structure on it. So the liability is very inexpensive for just a vacant piece of land, because it's just, I'm on it for that parcel. That's it. But slip, trip, and fall. Now, if you're going to build on it, you as a developer, you're going to have errors and omissions, and that's going to protect your plan and your business plan and the people coming in and involved on it. But just vacant land, yeah, it's just a liability policy for whoever owns that property. And I guess that's the big part, is if Nicholas Smith bought it or if Smith Enterprises bought it, right, your insurance policy needs to follow the entity that bought it to a T. Every once in a while, we get somebody that has a trust. So it's a Nicholas Smith trust for benefit of, your IRA, whatever it is. Your insurance policy has to be in that exact name, same commas, same spaces, because it's that important. If it's not, then you do have a gap. You have a coverage lapse in the middle of it. Who is it actually covering? Is it covering the person, or is it covering the entity or the trust? It can cover all of it, but you just need to be clear. That's all.
Gotcha. No, that makes a ton of sense for sure, for sure. So back in my W-2 employment days, of course, I worked for the city of East Chicago, and we were building homes. We built several of them while I was there. And for a stretch, we were getting hit with vandalism heavy on probably about 3 or 4 of our new builds. We got hit by, they were, stealing the appliances. They bust through the walls trying to find copper, and we used PEX piping, so there was no copper in there. So that was a failed mission for sure. But in instances like that, when you're building new, you have the structure somewhat up. How could we have been protected? Because we were not protected, when we were building those. But how could we have been protected, against instances like that?
So I told you how 2023 has been a little bit odd. You bring up vandalism and theft, and let's just go with a vacant house or a house that's being built, but right, nobody living in it. Okay. I actually have 7 claims right now, exactly what you just talked about, exactly to a T. They stole everything, including the kitchen sink, and I'm not lying. But on their policy, theft wasn't included because theft is now something that you need to have a central alarm system. Which means if it's ring, you need to have it going to a central, somebody's monitoring it. It needs to be well lit, locked, boarded, everything, and cameras would be a plus in order to get theft. So if your insurance policy was $1,000 a year for what you're building, if you wanted theft, it's going to be $4,000 a year. So that's what's changed in our world. You're buying terms, you're buying certain specific, if it's an act of God, for lack of a better term, weather, hail, that's completely covered. Fire, that's covered. But like vandalism, where they kick in the doors, they kick in the windows, they just do damage but don't steal anything. That's vandalism, malicious mischief. That is an add-on as well. So you need to be asking what your biggest concerns are of, does this cover theft? What if we're not here and somebody comes in and takes all the cabinets and the appliances we have sitting there, the furnace? Just need to make sure you're asking for a builder's risk. That includes theft, because that's the only way it's going to pick it up. But times have changed where it's much more expensive to do it. And there's a lot more on your plate of what you need to provide if you want that kind of coverage. So it has changed drastically. It really has.
Wow. So goes back to what you said, coverage versus premium. So many people focus on the premium, but don't look at the coverage. Was not aware that they are removing vandalism and theft off of coverage. For investors, that's one of the biggest risks you have. Is vandalism.
We have a new carrier, and they make you pick your perils, which are what's covered in your insurance policy, and is it special or replacement cost or actual cash value. So there's a lot more information that I think the investor needs to know now going into it, because it's no longer just, hey, here's your policy, it covers everything under the sun. It's not that anymore. Insurance companies are losing their shirts on property, but today more on labor, because the inflation on the building products have we figured that out in the last couple of years, and it's actually starting to come down a little bit, but labor hasn't. Labor went up where you and I used to pay $50 or $60 an hour. We're paying double that now. Yeah. So if you had a claim, the insurance companies taking care of all of that risk and all that build back and all the material. So now you're understanding it's worth more than just $1,000 of insurance. It's worth, what is it going to save you in case that day happens? And that's the conversation we really get into is, if it's important to you, let me know. If it's not, okay, so keep moving. But you have to know in your area, these are the crimes, or this is what has happened in your neck of the woods. So you better at least cover those couple of things that are important to you in the community. Gotcha. Yeah, it's a lot more protection on your side.
Gotcha. You mentioned builder's risk insurance or builder's risk policy. Of course, as investors, developers, just people. A lot of times when we're working on properties, we're not doing the actual work. We're hiring contractors to do the work, whether we're hiring a general contractor that has his own subs, or whether we're actually kind of acting as a general contractor and hiring out the subs. What type of insurance should we be making sure? And I know every situation is different, and even state by state, but just kind of as a general theme, what should we be looking at from the contractor's perspective as to what type of insurance policy they should have in place, while they're doing work on your property?
If we start at the beginning and work out, and I'll try and be a little bit quicker in explaining, but if you buy the property and you paid for it, it's in your entity's name, now you're going to hire out a GC or a contractor and keep going. At that point, you already have your property insurance and liability for the building and that land, but that liability stays with the land. It doesn't pick up any kind of action of being a contractor at all. It is a premise liability. So that's on the building and on the land. Then working as a GC or hiring a GC, if you are the GC general contractor and you're going to hire your carpenters and your plumbers and your HVAC and your roofers as yourself, you need to be insured as a general contractor. So what that means is you need to have insurance for every action. So if I'm looking at that house behind you, it is covering every action that you're going to repair under that roof and outside, but you need to be covered as a general contractor if you're doing that. If at the beginning of this conversation, I said, if you can shift liability off to somebody else, that's why we hire a general contractor. They have their own insurance, their own work comp, their own bonds. If that's going like that, you can put a builder's risk on your own property that you're doing, and it'll pick up all the equipment inside that's going to go on the wall. So your hot water tank, your new furnace, and you're going to put in PEX instead of copper, all that sitting in the house waiting to go in, that's your builder's risk. If that's important to you, then you have a builder's risk on your property because you as the owner are buying it and your GC is putting it in. Now, if your GC is going to buy it and he's going to carry coverage, and I don't see that very much anymore as far as the general contractor. Yeah. Most times it's the owner that wants to buy the material because they want to know how much they're going into the property on material and then how much going into the property for labor. Mm-hmm. At that point, yeah, the general contractor will carry the builder's risk, but it's not to your benefit. You want, if something were to happen to that material inside, you're going to want that with that contractor or the next one or however you're going to finish, it needs to follow you. So you should have the builder's risk on the land and the property, put the builder's risk inside. It's probably cheaper that way either way.
Gotcha. No, that's a great explanation. As we come up on time, again, I always like to honor my guest time, and I told you I get you out at a certain time for sure. But as we kind of wrap up, I know you've given people advice on coverage. You've told people to do one thing, and they've chosen for whatever the reason, whether it was because of finances, because they didn't want to pay the increased premium, it's come back to bite them. Can you share some stories of what really can happen when you as an investor or property owner are not properly covered? What are the potential consequences that you've seen, that really can damage a person's financial well-being?
I know of a couple that are horror stories of somebody getting hurt or whatever in a fire and they weren't properly covered. The ones that come to mind are personal injury, because that's something that we cannot rebuild. You can't replace. We always talk about tangibles. Property is property. If you burn it down, I'm sure that you and I could probably figure a way out to rebuild it without causing major financial harm. But what if somebody got hurt in it, that whether it's your family or somebody else, that's something that wrecks somebody. It wrecks your sleep. It wrecks your personal life. It probably even wreck your spiritual life for a while because you're trying to figure out why me. Liability does that. My advice for everybody that knows a story or knows a bad car accident or knows a fire, the biggest thing I can tell you is you need to sit down and just ask for somebody's time to just explain to them what's important to you and why. Because the ones I think about, little people, our kids getting hurt on a property because it wasn't properly boarded up, it wasn't properly done. There's stuff in the yard and somebody riding their bike, yep, they hit it, go flying. That's minimal compared to a house fire and somebody actually getting hurt or perishing from it. And that has happened, unfortunately. It has wrecked families financially, and just making certain that you don't do it again, because that's not something you can grow on. We all, as humans and as man of God, we need stuff that we can build on and elevate. Something like that is so detrimental that I don't think you can build the same structure on if you don't have that coverage. And we've seen that firsthand, both in businesses, personal lives, of stopping because they didn't have liability coverage. And that's it. The liability is by far the biggest one. That's the coverage that has the most zeros on the check. But you also cover your unknowns of, if it's that building and the property behind you, you're not there, so you don't know what happened. And that damages people. That will damage your lifestyle. It'll damage your family. I mean, if we're talking about that, we talked about entities at the beginning. If that's in a personal name and something happens, they're coming after your 401, your retirement, your equity in your house, your kids' college plans. But it keeps going. It doesn't stop because you ran out of money. It stops whenever you don't have anything. That's when it stops. And those are the worst ones to work on, because there is not an answer. If you don't have the liability coverage or property coverage in place first, there's no answer besides probably need to find an attorney. And even that's going to cost you money and time and efforts that aren't building your empire, aren't building your family. It's actually trying to tear it down. So that's my worst stories, is when it really hits somebody financially, personally, because there's no answer for it.
Wow.
It's the disease that needs education, I guess. Just if nobody gets anything else out of this but this, you should probably be sitting down and reviewing your insurance at least once a year or once every other year as your things change, because you bought the insurance to protect what you have. If you're not talking to your insurance professional, how do they know? What do they know has changed? I can't read every Facebook page. I can't read every Instagram post. I don't know what's going on in everybody's life, but if they would take just an hour out of their year and sit down and talk with somebody that's trying to protect them, that's the best advice I could possibly give you out of this timeshare.
Good deal, man. Well, Randy, I definitely thank you for sharing your time and your expertise. I hope people really do take heed to the warnings that you gave, and that you definitely parted with my listeners, because this is real. Lawsuits are real. I mean, they happen. I've heard several people say you have not really been in business until you've been sued. So it's not a if it's coming, it's just a matter of when it's coming, and it will come. So, and you want to be protected against those things, man. Randy, if people want to get in contact with you, please share your contact information or the best way people can reach you.
Certainly. My phone number is local, was 219-561-0102. And we're here, and we have, staff in the office all day, every day. And you can find me on the internet at insurancebyreigns.com. And that goes directly to our emails and directly to our contact page. But again, it's insurance by BY and then Reigns, my last name, RAINES. Nicholas, thank you so much. I appreciate the time and the opportunity to be here with you. And I hope your week goes fantastic, sir.
Same to you, sir. Same to you. Definitely want to thank you all again. This is episode 16 of the Wealth and Real Estate Development Podcast. I'm your host, Nicholas Smith. I want to thank you all again for listening. Please like, share, subscribe to this podcast. Wherever you listen to podcasts, whatever your preferred platform is, definitely want to thank you for listening. And again, let's go get wired up. Have a blessed week. Thank you so much for listening to today's episode. If you enjoyed it, please share this content with someone else who would benefit from it. I'm looking forward to having you with me on the next episode. Now go out and create some wealth and real estate development.